So in January this year, the Hindenburg Research Organization had released a report accusing the Adani Group of illegal and unethical business or financial reporting practices. They had released a 106 pages report on 24th of January which had a heading that said Adani Group, how the world's third richest man is pulling the largest con in the corporate history. The impact of this report was such that the shares of all the Adani companies that are listed on the stock exchanges tanked miserably and continued to plummet for weeks to come. So much so that many of the company's stocks even hit lower circuits during the intraday trading hours. Just have a look at the price movement of Adani Group companies once the Hindenburg report came out. Adani Enterprises, Adani Total Gas, Adani Transmission, Adani Green Energy and Adani Wilmar. All of these and some of other companies of Adani Group are in a downtrend after that report. This downfall in the share prices has eroded a lot of wealth of Gautam Adani, who is the founder and chairperson of the Adani Group. Gautam Adani has seen his net worth deplete over 700 billion during a month, from $120 billion to almost 46 billion US dollars. With this, Gautam Adani's net worth has hit a 2-year low mark. This fall has left the Indian stock exchanges and the investors in a state of shock, so much so that even Virender Sehwag had to come up with a tweet to support the stock market. Recently, net worth of Adani has recovered somewhat after Adani Group repaid some of its debt, and that has helped the group's companies to regain some of their share prices. But the topic of discussion for today's video is not the Adani Group or what they do with their business is right or wrong. Today we are going to talk about the Hindenburg Research Organization, understand about them in detail, what do they do, why do they do it, and how does it benefit them. So do stay tuned till the end of the video because you will get to know a lot about Hindenburg and their business model. Firstly, the name Hindenburg comes from the Hindenburg disaster of the year 1937, when a German passenger airship caught fire, killing 35 people. The company website says, "We view the Hindenburg as the epitome of a totally man-made, totally avoidable disaster. We look for similar man-made disaster floating around in the market and aim to shed light on them before they lure in more unsuspecting victims." Hindenburg Research was founded in the year 2017 in New York by Nathan Anderson. Hindenburg Research specializes in forensic financial research of the companies. In layman's terms, it looks for a corruption or fraud in the business world. While the research company claims to use fundamental analysis to help them in their investment decision making, they believe the most impactful research results from uncovering hard to find information from a typical resources. So particularly they look out for the companies that may have any combination of the following: accounting irregularities, people with bad reputation in management, illegal, unethical business or financial reporting practices, undisclosed regulatory product or financial issues. If we have a close look at the mentioned points, we would realize why did they go after the Adani Group in the first place. Before the Hindenburg report, already there have been a number of allegations on Adani Group for their unethical business practices, high debt companies, share price manipulation, etc. Also, in June 2021, Sucheta Dalal, the journalist who had investigated into the Harshad Mehta scam, had come up with a tweet on Adani Group. Although she had not mentioned their name, but everyone knew towards whom the tweet was targeted. And also, there is no denying the fact that the majority of Gautam Adani's wealth has raised in the past 3 years, making him the third richest person in the world. All of these factors turn the heads of the people at Hindenburg Research towards the Adani Group. So how does Hindenburg Research actually operate? Once the Hindenburg decide any company or group of companies as their target company to go after, they start preparing their investigation report by going through the public records or internal documents of the company. By talking to their employees, this report is usually prepared within 6 months to 1 year, and then it is circulated internally with their limited partners and then released publicly. And Adani Group is not the first or only company that the Hindenburg has gone after. In the past also, they have targeted many other companies such as Nikola, Clover Health, Lordstown Motors, Vince Finance, Genius Brands, China Metal Resources Utilization, to name a few. Natural question that may come to our minds: why does the Hindenburg do it, and what's in it for them? Clearly by now we would have realized that they are not social workers who are doing it for the benefit of the retail investors. They have a vested interest in all of this. As we had said earlier, once the report is prepared completely and shared with their partners, the partners together with the Hindenburg take a short position in the market in the target company, and Hindenburg takes profit if the target company share prices decline. In its Adani report, it said that it had taken a short position in Adani Group companies through bonds that trade in the US and other investments that trade outside India. It has made short bets against other companies it published unflattering reports on. A short trade is a way for someone to make money if an investment's price falls. Afterward, if the price of the company's stock or bond falls because of this negative attention from the report, Hindenburg can obviously make profit. Hindenburg has been criticized a lot in times in the past for unfairly pushing down the prices of stocks with potentially unproven and baseless allegations. But some people also call them a healthy part of the stock market who keep the stock prices in check and preventing them from running too high. Recently, Hindenburg has made a claim about releasing another report and said it will be another big one, leaving the retail investors in a state of panic. And the speculations around who would be the next target of the firm are in a full swing. We will definitely make a video on the new report from Hindenburg Research as and when it gets released. But for now, all I can say is that in the current market scenario, as a retail investor, we need to be wary of the companies that have high debt, zero or low profitability, and have a management with a history of unethical practices. I hope you guys found this video useful and learned everything you need to know about Hindenburg and their operations. Do not forget to like, share, and subscribe to the channel. I will meet you in the next video. Till then, take care.